Okay, welcome everybody once again to this channel. Welcome, continuing from our series of lectures from where we stopped the last time. Um, Unfortunately, most of us were hoping we'll resume back work today, resume our normal lives, but unfortunately, that didn't happen. The lockdown was extended by 2 weeks in major states here in Nigeria. So, still home. Now in this period that we're home, as I said earlier, the idea of this lectures was born from this whole lockdown. As we are home, we can as well learn a skill and as we can as well make money while we are home. So I talked about the technical and the fundamental analysis on the last series. I'm sure you've seen that. If you haven't seen that, you have to go back and look at it so we're on the same page. So without wasting much time, I'll run to today's series. Quickly, I want to talk about the trading sessions. Remember, part of the characteristics of the forex market said the forex market is always in continuous operation. It's in continuous operation. What does that mean? That means the market is running 24 hours every day from Sunday nights to Friday nights. Only weekends the market shuts down, except for cryptocurrency, which runs all through. But I don't trade cryptocurrency. I don't. So the various trading sessions. I'm sure if you watch news, Al Jazeera, CNN, BBC, you notice, especially in New York session, you notice them ringing a bell, and then to announce the resumption of the New York trading session. It happens. Even Nigeria has a trading session, but for those people that buy and sell Nigerian stock, you have seen it in the news as well. When they come and ring a bell, the session starts. So basically, the forex market has actually has 4 sessions, but Sydney and Tokyo is classified as, I classify them as Asian session. So there are 5 sessions actually. They have the Sydney session, Tokyo session, the London session, and the New York session. So I'm going to show you this. I believe you can all see my screen. I'm going to show you what it looks like, the timing on this website. This website is called Forex Factory. It basically gives a lot of information, a lot of gist about forex market. This is why we are here, the timing. Well, let me just quickly talk about the website. You can also see major events that are coming up, major events that will affect the forex market. For example, you can see today, April 14th, time is 10:07 here. These are major events. The G7, they're having a meeting today, so that might affect a lot of currencies. So basically, that's what this website does. Shows you some major events. That's what I use it for. There's some other things there that I don't do. I don't use it. On Wednesday, you can see some major activities for the US dollar. The ones that I read are major activities. US dollar has some major activities. Even the Canadian dollar has a major news coming up at 3 p.m., which will affect the currency. So, well, back to why we are here. Once again, this website is Forex Factory. Forex Factory. It also has a lot of there are a lot of forex traders here. Everybody sharing their idea. So that's about it. So the sessions, Sydney session. Sydney session starts by 10 p.m. every day, 10 p.m. every day, and then it goes on. It runs through while Sydney session is on. Tokyo session kicks off by 1 a.m. our Nigerian time, and then it continues going on. So while Sydney session is still on, Tokyo session is also going on. So in between, while Tokyo session is still on, Sydney session closes by 7 a.m. and then Tokyo continues. Tokyo session continues, and then while it's going on, the London session kicks off by by 8 a.m. in the morning, Nigerian time. So while the London session is on, Tokyo session is on as well, and then it closes. Tokyo closes at 10 a.m. But London is still on. London keeps going, and then in between, New York session kicks off. New York session kicks off at about 1 p.m. Kicks off and then goes on. Then London session ends by 5 p.m. while New York still goes on and on. All this is at the period the market is open. And then it goes on up until 10 p.m. and then senior session continues again. So that's it. This is how the market runs through. So this time, me in particular, I hardly open trades at this senior session because market is always slow. The major session that moves the market is the London and the New York session. That's the major session. Although it doesn't mean the market doesn't move in this time, it does, but it's not as great as London and New York session. Now, in this interlude, this period, another great period to trade is this interlude between when London session is on and when New York session is on. You have a lot of volume, a lot of people trading at that time. So as in between, you can see this time, 1 p.m. to 5 p.m. That's a very great time to trade. Regardless, you can still trade at the other times, but this is when you have a lot of volume between this interlude. So that was it for the trading sessions. That's it. And I would quickly run through this. So let's move on to our presentation. Well, remember what I talked about on Euro USD, our last discussion. I hope it goes as planned. Remember, I told you I was hoping. I am sure because of that the head and shoulder pattern. Remember, I was at that class. The price was here. So I did say price will go down, do a bit of shakara, and then that shakara is actually called in the Forex jargon. It's called what's the word again? Retracement. It's called a retracement. It's called a pullback when price comes down a bit to relax, to get fuel. Now you can see this as a journey. Price takes off from Lagos going to Enugu, goes, and then price has to come back to rest as well. Maybe at this point, price comes to Ore, and then slows down, rest, and then it continues again. And then it gets to Onitsha, slows down to Biopa. So that is how it moves. So I am hoping this is not a destination. I am hoping it goes all the way to Enugu. I'm hoping. If it does, I'm going to make a lot of money. Maybe by Thursday or Friday, I'm going to make a lot of money. And I'll share the progress. Although I'm very scared. But I trust my analysis. So I'll give us an update on that. So let's go on. So I haven't talked about the trading sessions. So now I want to talk about some basic terminologies, some jargons you hear in the Forex market. You hear them. Of course, every discipline has its own jargons. So for the Forex, it has its own as well. So there are some basic terms that you should know. You should know some basic terms. So the first stuff is PIP. What is PIP? PIPs. It's actually the short form for percentage interest points or price interest points. Now, this is basically the measurement of movements in price. Basically, that is all you need to know. Just like you have other measurement units. You have how to measure length is either in meters, in centimeter, kilometer, miles. So basically, length has its own unit. So now in the Forex market, it has its own unit as well, which is called PIP. So the movement from this point, no, let me go what has happened already. From this point to this point, it is measured in pips. It is measured in pips. 10 pips, 1 pip, 20 pips, 200 pips, 1000 pips. That is basically how the movement in the forex market is measured. It is called pips. Now, how do you from the movement, how do you calculate your profit? For example, I always advise people to use the next point I'll explain is the lot size. I always advise traders to use 0.01 when trading. Now, for every 10 pips movement, if you're using a 0.01 lot size, which is highly recommended, and you're trading in a dollar account, you'll be making $1. Every 10 pip is equals to $1. So if the market moves, if the price, the currency moves 20 pips and you bought, you have made $2. That is it. If it moves 100 pips, you have made $10. If it moves 200 pips, you have made $20. And it goes on like that. If it moves 1,000 pips, you have made as much as $100. And trust me, there's a lot of movement in the market every day. There's a lot of movement every day. Market keeps moving. So all of these movements are measured in pips. So if you can catch just 20 pips in a day, market moves for, it depends on the currency. Some move as much as 200 or 400 pips in a day. So if you can just get 20 pips of that movement, of that length, you're good for the day. 20 pips is about, no, not 20 pips is small. 20 pips is $2 here if you're using 0.01. If you're using 0.01. So if you can catch, even if you can catch that, maybe on different currencies, 10 movements, you're having $20 for the day and you're very good. You're very, very good. So basically, I hope that is clear. If it's not clear, ask questions in the comment section. Remember to leave a like for this post. Also, remember to subscribe. Hit the bell icon there, or you might see it clearly written as subscribe. Hit it over there so you would get notified every time I release a new video. So that is it for PEEP. For PEEP. Remember, the market moves in pips. That is the major the unit in which the movement in the market is measured in. Pips moves as much as different currencies. Imagine every currency moving as much as 400 pips every day. And just get the bit you can get from them, 20 from them every day. You're good. But if you can study one pair, study its movement, and get as much as 200 pips from that particular pair every day, you're fine. In the words of a great man, Bruce Lee, he said, "I fear not a man that has mastered 100 kicks once. I fear not him. But I fear a man that has mastered one kick 100 times." So that basically summarizes consistency. If you can master a particular currency, just one currency, you have to run about studying this, it's distracting. So that is for PEEP. And now we'll move on to the next pair, which is the next basic term. So the next point, the next basic term which we'll look at is lot. So these are basically units in which you trade, specific units of amount which you're buying or selling. So it's basically determine, like you use, it depends on how much you have in your account. That determines your lot size. So for example, 0.01, if when we get to the phase where they all download trading platform, the Metal Trader 4, you would you see it. It's when you want to place a trade, they'll give you an option to choose a lot size you want to use. So we have the standard lot size. These are for the big boys that have as much as 100,000 US dollars in their accounts. It's recommended to use this lot size between 1.0 to 50. These are the standard lot size. Now the mini lot size is from 1,000 US dollar all the way to 99,000 US dollar. Now, if you have an account of between 100 US dollar to 900 US dollar, this is the lot size you use for every transaction. For every buy or sell you enter, you use between this lot size. Remember, this is what determines your profits. If you're using 0.01 and you buy and the market moves 10 pips, remember, every 10 pips will give you 1 US dollar. That is it. That is it. That is what you should know for now. Because if you have any question, please feel free to ask. I'll clarify. If you want to know more about these other lot sizes, why I'm emphasizing on 0.01 is I am sure that is what majority of us subscribers are going to be using. I'm not limiting anybody, but I always advise it's better for risk management to use a lower lot. So quick, we'll go to the next basic term, which is leverage. So leverage, basically, it's is anything that on a basic term, on a layman's term, leverage is when you can use something which now then gives you the power to use that your small amount to control a big amount. So that's how the leverage also works in the Forex market. It's basically with your 100 US dollar, your broker. Remember how I explained who brokers are earlier. Brokers is they give you the platform on which you trade, which is just like you have the choice of choosing from different banks. You also have a choice of choosing a different broker. I use Rally Trade. Those are my brokers. I've been trading with them for a while. So if with your 100 US dollar account,